This is Alan Bush with the Daily Financial Forecast for Tuesday, September 25th. Starting out with the stock index futures, we are seeing some higher prices this morning. Some of this linked to news that the U.S. and South Korea have now signed a trade deal. Also, there was some support with the consumer confidence report coming in better than expected, in fact, at an 18-year high. So nothing really changing longer term. Still continue to believe that in spite of the trade problems that are continuing between the U.S. and China, that it's the still relatively low interest rate environment, not just here in the U.S., but globally, that will continue to support stock index futures. Moving over to the currency markets, seeing the dollar index under some pressure. Now the dollar should have firmed with the consumer confidence coming in as strong as it did. That not really being the case, the dollar is still lower, so that suggests that additional pressure is likely for the dollar index. Anytime a market cannot respond positively to bullish news, that indicates that there may be some additional pressure for that market, in this case the dollar index. Also some gains in the euro currency. Yesterday, ECB President Mario Draghi hinted of further inflation pressures. This caused traders to believe now that the European Central Bank next year, possibly in September, could hike interest rates in the Eurozone by 10 basis points. So interest rate differentials are continuing to move against the dollar and for the euro currency. Moving over to the interest rate futures markets, the bond market now falling to its lowest level since October of 2014. Some additional pressure with the consumer confidence number being as strong as it was, that a negative for the bond market. Also, we do have the two-day Fed meeting starting today, concluding tomorrow. Still appears that there is a very strong possibility that the Fed will hike rates by 25 basis points at tomorrow's meeting. Probably another 25 basis points increase at the December meeting. Either way, it still looks like the U.S. economy is performing very well. Additional rate hikes from the Fed point to lower prices across the board for the interest rate futures markets, especially the long end, the 30-year bonds. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.